Ladies and gentlemen, good day and welcome to the earnings conference call for quarter and half year ended 30th September 2024 of Lakshmi Cement Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you and over to you, sir.
Yeah, thank you, Michelle. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q2 and H1 FY’25 call of Lakshmi Cement. I need to highlight that Lakshmi Cement is also the holding company of its listed entity, Udaipur Cement Works Limited, and therefore this call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, CFO at Lakshmi Cement. I would like to mention on behalf of Lakshmi Cement and its management that certain statements that we made or discussed on this conference call may be forward-looking statements related to future developments and which are based on current expectations. These statements are subject to a number of risks, uncertainties and other important factors which may cause actual developments and results to differ materially from the statements made. Lakshmi Cement Limited and the management of the company has no obligation to publicly alter or update the statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management of Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you and over to you, sir.
Okay, Vaibhav, thank you so much and good afternoon to all of you. Welcome to this quarter 2 FY’25 call of Lakshmi Cement along with Udaipur Cement Works Limited. Quarter 2 has been quite volatile, quite challenging, not only for Lakshmi Cement but overall industry-wise also. If you look at typically July-September is low in demand because of cyclicity and monsoon factor. But this time around, this was also coupled with the general election and usually what happens after this general election, some kind of sluggishness which creeps into the market. So that triggered very low demand in different geographies. Perhaps I think all of you know that demand was quite subdued in the quarter 2 of this year, and because of very sluggish demand, there was a lot of pressure on prices also. My estimation or our estimation goes that prices have dropped by about 8%, and this time around I think drop has been quite substantial in case of east, west, and followed by north. For a change this time, drop in prices in south and northeast were the least. So since our geographies are limited to western part of India, part of it north and east, so yes, I think there has been impact on us in terms of subdued demand and depressed pricing. Nevertheless, I think yes, of course, I think result would have been much better, but I think what we are really taking confidence from is that whichever market we operate, we are holding on to the market share. Just to let you know, part of west, part of north and east where we are there, we sell about 70% of our cement, and there our market share is intact, and also price-wise also we have done better than others. So that is what that gives us the confidence that directionally we are all right. Yes, there was pressure because of external environment which we cannot control fully, but whatever we could have controlled, I think we have tried every bit to change that in our favor. Just to give you a very brief performance update, of course volume and all that our volume is down by about 9% on a consolidated basis, but leading indicator if you look at, I think that gives us a lot of confidence that directionally we are all right. So trade, I think we are at about 53-54% quarter-wise. Blended cement is at 66%. Lead also we have substantially reduced. Lead was at 374 km, which is about 13 km lower than last year same quarter. We have done quite well in terms of renewable energy also. Renewable energy last quarter stands at about 40%, and out of that about 20% is solar and wind. So that way I think we are progressing very well. If you look at Other, performance parameter, variable cost on a consolidated basis, we have done better. We are lower by about 11% YOY basis. Overall cost also has been down by about 5%. Power was down by 9%, fuel by 22%, and fuel cost was about 1.62 rupees per kilocal. On TSR front also, we have done quite well. TSR was at about 13%, and operating cost also was down by about 4%. If you look at EBITDA drop of top players in the industry in last quarter YOY basis, that ranges from 225 rupees per ton to about 400 rupees per ton, and we also fall within that range only. We just we get carried away. If we look at percentage, I think whenever price drops, I think that similar kind of drop happens for every player, right? So our drop was also in line with the industry. And if you look at, because we have also done comparison ourselves within the players who are there in our geographies, because at times also we carried away looking at the larger player who operates in different geographies. I told you that price drop in different geography was different this time. Overall drop was 8%, but our geography somehow, I think, for a change was little higher drop, and that is what has impacted our EBITDA, right? But we are confident that I think directionally we are all right. Leading indicators are favoring us, and I don't see any issue going forward also. Of course, I think there is also always scope of improvement, and definitely I think whatever levers we have on top line or on cost front, we keep on working on that, and hopefully I think we'll bounce back in this quarter and going forward. So this is what the brief update I just wanted to give you, and now we are open for question answer.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. The first question is from the line of Nigel Mascarenhas from Leo Capital. Please go ahead.
Good afternoon. Thank you for the opportunity. Couple of questions. Firstly, by when is the merger with Udaipur Cement Works expected to be completed?
Yeah. Go ahead with the second question.
My second question was, by when do you expect the expansion in the east to be completed, and how much of capex will be spent towards it?
Yeah. To answer your first question regarding the approval and the completion of the merger, so the board had approved the consolidation of the cement business by merging the three subsidiaries of JK Lakshmi on 31st July in their board meeting. Thereafter, the process is that we have to first approach the stock exchanges. And once the stock exchange, both the stock exchanges, which is the BSE and NSE, give their approval, then they forward their joint recommendation to SEBI. And only when SEBI approves it, then we can approach the NCLT. So that is the process. While the approval from BSE and NSE together with SEBI takes anywhere between 3 to 4 months. For us, the stock exchanges, as we understand, have forwarded their recommendation, cleared that application, and have forwarded it to SEBI. SEBI, the BSE people and NSE people are chasing them. We can't approach them directly, and there have not been any queries there so far. And we hope in the month of December, SEBI would clear it, hopefully. And thereafter we'll approach NCLT. NCLT, based on the past experience which different companies and different players have, take anywhere between 8 to 9 months. So as we have mentioned in our press release which we put in, and also the presentation which we have put in the website after the board approved the merger, anywhere in the second half of the calendar year 2025, we expect that to be in place. Though we are trying to expedite it as much as possible, but things are not in our control. NCLT take their own sweet time. They are already overloaded with other cases, but we are trying to push it. And our endeavor would also be to do it as fast as possible. That is as far as the timing for the merger of UCWL is concerned. Now your second question regarding the expansion in the east. Yes, we have embarked on an expansion of 4.6 million tons of cement together with about 2 to 2.3 million tons of clinker at our Durg plant. And initially we'll take up the Durg clinkerization along with the grinding unit in UP first, and follow it up with the other two grinding units at the other location as you mentioned. So somewhere in FY'26-27 we expect that to be on stream. The first phase, which will include the clinkerization and half of the cement capacity, follow in the next financial year by that. Expenditure, we have not incurred much as of now on the Durg expansion. In the current year, we expect anywhere between 100 to 150 on that, primarily on account of some initial placement of orders, etc. And thereafter, the pace of expansion as well as the capex will gather pace in the next FY.
Got it, sir. Thank you.
Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Ashish from Himalaya Capital. Please go ahead.
Yeah. Afternoon to the management. So I had two questions. Firstly, why has there been a delay in the ramp-up of our expanded facility in Udaipur Cement Works? And secondly, what sort of utilizations are we seeing operating for both clinker and cement in the UCWL expansion?
Yeah, on the first question of ramp-up, we commissioned our grinding station at Udaipur on 28th of March, and as you know that this first quarter was marred by general election and followed by this impact of cyclicity and sluggish demands, which I mentioned during my opening remarks. So that has impeded our progress a bit, but I think that now taking pace, and the way we see trend now, I think we are on right track, and whatever plan we have for this year, hopefully we'll end up achieving that.
On the second question, the utilization for both clinker and cement in the UCWL plant?
Yeah, so utilization, just let me know.
Thank you. Yeah.
So clinker utilization was at 83%, and at Udaipur 58%, and cement 65%. In JK Lakshmi Cement, and
37% in use.
Both the line put together, right?
Yes.
Yeah. It's about 37% of Udaipur cement utilization.
On consolidated, 57%.
And consolidated basis, it is 57%.
Yeah. Okay. Thank you. Thank you to the management.
Thank you. You may please press star and one to ask questions. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi. Thank you for the opportunity. Sir, some data point. Non-cement revenue and RMC in this quarter, and what was the margin?
Yes, so non-cement revenue in this quarter was 126 crores and margins were lower, as has been generally, it was down to about 5%.
Okay, and how much is RMC in this?
Out of 126, RMC is, I think, 66.
66 crore. Okay, understood. So firstly, this quarter our volume have degrown by 9%. So how our guidance stands, which was 8% for this year? And secondly, 9% degrowth, should we assume the company has lost market share? How you read it, like it's a regional thing, or how should we read it?
Yeah. So first I'll address you the question which you asked, latter part of it. So none of the core market we have lost our market share. In fact, in some of the market we have increased our market share. Now the volume growth which we talk about, I told you that prices were quite depressed, and some of the non-core markets where we were selling, I think it was not advisable to sell in those markets because we were going below variable cost, right? So that was a conscious call not to sell in those markets, but to kind of be, consolidate in the market which is our core market, and in those markets we have improved market share a bit rather than kind of losing it. So that was a conscious call not to sell in those, far off market. And that is what is reflecting in our lead also. If you look at our lead was 374 kilometers, which is 13 kilometers lower than the same quarter last year, right? So that was a well thought strategy, because had we sold in those markets just to go after the volume, I think you would have achieved little better volume, but our losses would have been more. So that was a conscious call not to sell. So that was on this a 9% thing which you are level. Other thing, the guidance about in the next 2 quarters, I'll just give you industry estimation, whatever our estimation is. Quarter 1 was almost flat, industry-wise, all India-wise. Quarter 2, we estimate that the growth is about 1 to 3%. Quarter 3 is estimated, industry I am talking about, is about 4%. And quarter 4 is going to be about 9 to 10% kind of thing. This is what our estimation is, right? And if you go by that, then overall all India cement demand is going to be about about 4 to 5% for a full year basis, right? So 2 quarters, I think our endeavor would be to go in alignment with the industry growth. That is what we see.
Understood. So tell me one thing, if I see your freight cost, which has increased sequentially by 50 per ton, why is that so?
Freight cost?
Sequentially, I'm talking freight cost have increased by 50 rupees per ton.
No.
So last Q1 was 1040 per ton. This quarter it is looking 1085 per ton.
No, so sequentially, year on year basis, it has gone up by about 4%, which is in alignment with the inflation, right? And I think that has gone a bit up because of some amount of increase in clinker sale also, right?
Okay.
Lower clinker sale, no? Because clinker, what happens is on the ex-works basis mostly. Yeah.
Understood. Got it. That's it from my side.
Thank you. Please press star and 1 to ask questions. The next question is from the line of Rajkumar Das from Navodaya Enterprises. Please go ahead.
Hello, sir. My question is regarding your conveyor belt project, which has been delayed for a long time. Could you please update the current status of conveyor belt at Group Plant?
So conveyor, you are talking about Durg 5 conveyor, right?
Yes, sir.
Yeah. So as I said before that there are some approvals which are pending, and that is on the last stage of approval. And so that government approvals it takes little bit more time, and some of the things we cannot control. But we are actively working on that, and hopefully I think we'll be able to resolve this very quickly. Yes, this is taking little longer time because of again election was also one of the factors, because entire machinery was not really that focused on those kind of jobs which are not important for them. So because of that this got delayed, but we are working on this. Probably I think we'll have some solution very quickly.
Okay, sir. That's from my side. Thank you.
Thank you.
Thank you. Please press star and 1 to ask questions. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. So, firstly, I joined the call a bit late, so if you could just share the volumes for the cement and clinker at standalone and Concall level.
Clinker volume for this quarter was cement sales was 17.82 and clinker was 0.84. Total was 18.66.
17.82 and sorry, how much?
17.82 and 0.84. Clinker total 18.66.
Okay. And this is standalone, right?
Sorry?
This is at the standalone level, and what would be Concall?
Yeah, this is certainly on a standalone level, and on a console basis, it is 23.60 for the cement, 1.33 clinker, and total 24.93.
Got it. So, about the comment that you made that a lot of markets your net realization or few markets where net
So
realization.
you are not audible, please. You are not audible. Little louder.
Yeah. So on your comment which you made that in few markets, your variable cost was higher than the realization, and hence you kind of did not participate in that market. So just wanted to understand, like, which markets would these be, and like, given that pricing seems to be staying subdued since quite some time, what is your strategy to combat this situation and get volumes back up again?
So our strategy is to reinforce in the market or the battleground which we have. And battleground for us is all those markets which are near to our plant, right? So we keep on reinforcing our position in those markets, and during quarter 2 also we have done the same thing. So I think in all those markets our trade sales have gone up, and overall, market share also, in some market it is intact, and some market we have done better, right? And those, far off market, like I would say, call them secondary market, is, deep into central India, then, eastern part of UP and those, markets. So there I think we did not participate because our, prices were not remunerative, and realization was lower than even variable. So that was a conscious. So those market I am talking about. Otherwise, all those 4 markets like, Rajasthan, Gujarat, eastern market, Chhattisgarh, Odisha, Vidarbha part of it, eastern MP and western MP. These are the markets where we keep on consolidating ourselves, and that will keep on kind of effort will be further on to consolidate in these markets even better.
Understood. And generally also a thought, like, I think 1.5 years back, 2 years back, we had said that we are embarking on a journey of improving the brand in the market and improving in that sense realization as well. So how far have we moved on the journey, and if that could also help address this problem?
We have progressed quite far, and if you look at the bit of certain difference between the leaders and JK Lakshmi Cement, last year and even first quarter also was reducing, right? So that has come about because of the actions which we took and which I elaborated in my previous calls, right? So on levers, on top line, on cost, which I mentioned some of them during my opening remarks. So that journey is, I would not say fully accomplished, but I would say definitely 75% we have accomplished, 25% yet to be done. The major portion still, I think we are further working on brand and premiumization. So we are working on brand rejuvenation also. And perhaps, when next quarter when we meet, so I'll update you on what actually we are going to do with the brand. So that is a very ambitious project which we have already started, and hopefully we'll have some update during next quarter. So I would say about 70-75% journey we have traveled, and that has resulted into reduction in the gap between leaders and JK Lakshmi Cement. And about 25-30% still remains, and that is not the final thing, because we keep on exploring different avenues, different opportunities, and we embarked upon them. And of course, I think digital also will help us to improve our efficiency further. And some of the plants we have already deployed some AI tools and algorithm which is going to improve our efficiency in different value chain in the operating plant. So I think 25-30% from the previous one, and even going forward we will explore further all those avenues. We'll just try to realize with technology, with our experience and equipment which we have within us.
Understood. Thank you. And also, lastly, pricing, has it improved versus Q2 averages? What we're seeing now?
Prices have improved a bit for sure. Prices have started going up from September. October was more or less stagnant, little bit upward trend. But now since post Diwali demand will improve, hence prices are also likely to go up. So definitely prices will go up once demand improves.
Got it. Thanks a lot. I'll come back in the queue for more.
Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Raghav Malik from Jefferies. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Please, sir.
Yeah, hi. Thank you for the opportunity, sir. Just a few housekeeping questions, actually. What would the premium product mix be? I don't think you mentioned that. And the premium product mix, even as a percentage of just the trade volumes?
So premium product proportion is about 25% on our trade sales. Is about 13% in on an overall basis, right?
Okay, got it. And just on the cost side, the fuel cost per kcal this quarter, what would that be?
Fuel cost, rupees per kcal you are asking?
Yes.
It was 1.62.
1.62. Okay. Thank you. That's all from my side.
Thank you. Please press star and one to ask questions. The next question is from the line of Sanjeet Tambe from Centrum Broking Limited. Please go ahead.
Yeah, hi sir. I just wanted UCWL volume for this quarter and previous quarter.
UCWL volume they did 5.74 cement sale and 0.84 clinker sale. And in the preceding quarter, you wanted, no?
Yeah.
6.41 was their cement sale and 0.9 was their clinker, total 7.31.
Okay, thank you.
Thank you. Please press star and one to ask questions. The next question is from the line of Jatin Chaparwal from Chaparwal Enterprises. Please go ahead.
Hi, sir. I have just one question. I need to know about the capex plan you are planning. What's the stage of it?
Capex, as I mentioned in response to some earlier question, we are having 2-3 projects on hand. One is the Surat grinding unit. We expect that to be commissioned towards the end of this financial year, wherein we are adding 1.35 million capacity therein. And then there is a Durg expansion, which will take 2 to 3 years therein. The Udaipur expansion is virtually complete. Some small ancillary jobs are left. So that is as far as the capex are concerned. Railway siding project is on. So we expect that to be in place in the first quarter of the next financial year. Partly we have already started using that railway siding there at the.
Okay. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, this is the last reminder and no further reminders will be given that you may please press star and one to ask questions. The next question is from the line of Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yeah, thank you, sir. Thanks for the opportunity. Sir, what is our capex guidance? You just give the number of the capex. So just want capex guidance for FY'25 and FY'26.
Current year, we expect we have done about 175 crores in the first 6 months. We expect in this year FY'24-25 for the full year can do about 500 crores, then 700 next year, followed by about 800 to 850 in FY'27.
Okay. And sir, power and per kcal cost has come down to 1.62. So do we expect more decline in the coming quarters, or it will remain at the same level?
Around the same level it may be. We don't see any substantial drop therein.
Okay, sir. That's all from my side. And thank you and all the best to you.
Thank you, Mr. Uttam.
Thank you. This will be the last question for today, which is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you. Sir, I think the CapEx you mentioned, it is for standalone. So on Concall basis, in 1H, we have done 440 odd crores. So for 25, 26, 27, put together at Concall level, what the CapEx are we looking at?
Whatever, you're right, whatever figures I've given is for the standalone. So we may have another 200 crores for Udaipur, whatever 500 as talked of for FY'25 on a standalone basis, and about another 200 for the Northeast project. That is as far as in the subsidiaries are concerned in FY'25. Going forward, Udaipur may be not there, maybe only 30-40 normal capex there, including some leftover of the expansion, and another 200 to 250 for the Northeast project. And thereafter, in FY'27, nothing for Udaipur, but Northeast may have about 400 to 500 crores.
Sorry, sir, I still want to tally the number. For FY'25, so 500 is standalone plus 200 crore Northeast, so put together would be a 700 crore full at Concall level, FY'25.
Another 200 for UCWL you have to add.
Okay, so 900 crore total.
Correct.
And for FY'26, total would be 700 crore standalone, and Durg expansion would be how much? So
700 crores includes Durg expansion. Northeast asset, when I say Northeast, that is the Assam project, in the subsidiary. Not in the Durg. Northeast doesn't mean Durg. It means the Assam project, which is in the subsidiary, right? 700 includes Durg expansion, right?
Okay. So Northeast in FY'26 would be a 300 crore, you say?
Yeah.
Okay. And this Durg expansion, so just to clarify, first Surat expansion, last time we said we will be doing a 1.35 in a half by October and March, but now we will be doing the entire 1.35 by March end.
Yeah, around that.
Okay. And for Durg expansion, the first phase also, previously we were looking to start by FY'26, the clinker and 2.4 million ton grinding. So now this will be...
Yeah, it may be spilling over to the first half of the next financial.
And then the second phase would be in FY'28?
Yeah, FY'20, yeah, 1 year later.
Okay. And then the Northeast will be in FY'28, will start?
Around that, you're right.
Okay. And just a data point, CC ratio for this quarter was how much?
What ratio?
CC, clinker, cement to clinker ratio.
1.45.
1.45. And this RE share, which is a 47%, so by March end, this will increase to, last time we said 50 odd %, so that remains the same.
Yeah, so yes, I think we'll be closer to 50% because we are still working on some of the solar projects. If that gets commissioned, they'll reach there.
Okay. And in terms of the overall Concall level cost reduction at per ton basis, now how much one can look at?
So as I said, Shravan, yes, we are working on now one thing which is a big, chunk is, premiumization, which we are working on. So that exercise is going on, and perhaps that will give us some good, leeway. Apart from that, I think this, operational efficiency is a continuous journey. So we'll keep on getting, something as we progress. So definitely I see, 50 to 75 rupees a ton. That is what I see. 50 to 100 rupees a ton. Going forward, we'll decide different, actions which will be taken.
Okay. And once, as you said, in the second half, we will be doing in line with the industry growth, but in FY'26, we will be growing much better than the industry growth?
That is what we wish, Shravan, because now till that, by that time, I think our capability improvement plan, which we have taken for Udaipur expansion, that will come in full force. So definitely our ambition, our plan is to grow faster than industry next year.
Okay. Got it. Thank you and all the best, sir.
Thank you, Shravan. Thank you so much.
Thank you, sir. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, I would like to thank the manager J.K. Lakshmi for the call, and many thanks to all the participants joining the call. Thank you very much, sir. You may now come to the call, Michelle. Thank you.
Thank you.
Thank you, sir. On behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.